precision, watch investors collide.
Hey, everybody. Welcome to another episode of Fundraising, where we interview top early stage investors and ask them all the questions that you, as a first time fundraising founder, want to know about the fundraising process, which, as the name implies, is actually not very fun. But hopefully, after this podcast, after this episode, Matias can maybe give you a little bit less things to worry about. And I have no doubt this is a special one because Matias is a colleague of mine here at Harpoon. He not only reviews and does a lot of the deal management here at Harpoon, but then is also the front lines for Black Flag, our program within Harpoon. So we have kind of a double whammy as far as the advice and insight that you can provide with the founders today. But Matias, I'll let you take it away for just a couple minutes on maybe your background and why you came to Harpoon Ventures, what you were doing before. And then actually, maybe before we dive into that, could you give a quick overview? I assume people know who Harpoon is, but give a quick overview of who Harpoon is, what we invest in, average check size, and maybe the stages that we invest in.
That sounds good. Thank you for having me on, Matt. So as a quick recap of Harpoon, Harpoon is an early stage venture capital firm. And what we focus on from an investment perspective are what we see as kind of critical technology domains for the United States. So how do we invest in technologies that really accelerate our strategic capabilities as a country? And I think sometimes, people might associate that directly with defense. And true, defense is a huge pillar of what we do, but it's certainly not excluded to that. And so we invest AI, cybersecurity, data infrastructure, all the way to kind of the more deep techie realms, energy, manufacturing, robotics, aerospace defense. And so it kind of runs a big spectrum. But a lot of what we like to do is help companies navigate government procurement and really scale with the government as a customer. And so that's kind of the big unlock we try to provide in Harpoon. Check size, typically, I'd say like EK on the smallest end, all the way up to 5 million. And stage, it is a little bit dependent on the stage that the company's raising, but anywhere from pre-seed to Series A is kind of the sweet spot for us. In terms of how I got to Harpoon, I think it was one of those like very fortuitous, right place, right time moments. I started my career in banking and a lot of different functions across kind of the capital raising The first was at Goldman, and I was covering kind of the debt capital markets. So helping traditionally large public companies think through how to raise debt from institutional investors. I think there was a point where, there's only so much I could learn about setting interest rates on bonds. And, maybe there was like a greener pasture out there for me. I was very fortunate that one of my friends at the time at Bank of America, who was focused on kind of the industrial sector, flagged an opportunity with the bank. One of the things that was happening at the time was Bank of America was trying to rethink its positioning in the banking world and thinking through how do we get exposure to these high growth tech companies that will soon and hopefully one day be the leading public companies out there. And for them, the priority was to engage with companies sooner. And so as a firm, which had not been traditional in the Merrill Lynch pre-financial crisis, but even after post, and really engaging companies earlier in their company life cycle, say like Series C, Series D, and helping them think through their later fundraising, the types of capital that traditionally may have been associated with public investing that have now shifted towards kind of private markets. And so think of like your T. Rowe's or Fidelity's, that very large public company investors, and now kind of sitting in this weird place where they wanted to unlock some of the gains and kind of returns associated with these high growth tech companies. And then ultimately, hopefully helping them raise their IPOs or do large scale M&A. And so I was on that team specifically focused on kind of deep tech and climate tech sectors. That was kind of the pocket that I sat in, and was fortunate to work with some great companies across the board, but some that were Harpoon portfolio companies. I think the most memorable one to me, because it was the first deal I'd ever done at Bank of America, was for Solugen. So they raised a $350 million Series C. We helped bring on BlackRock, Billy Gifford, and Temasek, the sovereign fund from Singapore, onto the cap table. And really, it was amazing to see, one, not only how transformative some of these technologies were, but also kind of the influence that they might have in changing what we might associate with kind of very incumbent legacy industries. And so got familiar with the Harpoon team from that experience, ended up joining a few years down the line, and was very lucky to join a team that I think beyond anything carries a very special mission in the venture capital world. Like, I don't think a lot of firms, are able to have some similar value prop in the sense of, how do we really unlock like a different avenue for a startup today? And I think it's like this whole idea of building for the government, building for the country, and leveraging government as a partner earlier in the company life cycle, something that we've seen kind of develop over the last few years. But I think it's always been kind of the ethos of Harpoon, and I thought that was something pretty special.
Yeah, I love it. We another interview that we did earlier this week was with Larson Jensen, the founder of Harpoon, and we talked a lot about how unique the culture is and what we get to provide for founders, which we'll dive into in the fundraising process for sure. Thank you for that background. I think that's helpful for the people going into this. I think what's really cool about Harpoon and the background that you bring is a mix between kind of the financial and the banking side, which I think is very important. Founders don't realize in the fundraising process how important finances can be, and then especially as they get further in the process. So you bring, I think, a unique insight on that angle, which is great. Before we dive into the fundraising process, we had questions that founders had essentially nominated and upvoted that they wanted VCs to answer. So we'll dive into some of those first. The first being, what is the hardest part and the easiest part? Or actually, maybe let's say it differently. What is the part that you like the most about being a VC? And then what are the parts that you maybe like the least about being a VC?
Yeah, I think on the most part, it truly is seeing where the world is shifting towards. Before, I think I would have ever had experience on as on the banking side, or even kind of as a public investor, and maybe to put like a tangible case study for that. I remember when we made an investment in Allo Atomics. I think this was still very early on in kind of conversation about what it meant to have real baseload capacity for energy generation in a way that is sustainable. Now, there had been a big push, say 2019 era, when climate was a sector that was quite hot in the ecosystem. But I think they were framing it almost as in a different lens. It was, how can we come up with alternatives to traditional fuels, and perhaps ones that had a cleaner or greener look to them? And so we went through that cycle. And I don't think like nuclear really had a renaissance until the last couple of years, where we saw big tech kind of put focus on it. But I remember thinking like, even from like a private investor lens, I was like, you know what? Like, as a byproduct of what I think I see our focus as an ecosystem pushing towards. And in this case, it's kind of a sovereign energy generation solution. There's all sorts of implications about like the ecosystem needed to support that infrastructure. So like, from that vantage point, I was like, maybe it'd be a good idea to invest in a company like GE Vernova, which has historically been a huge supplier of wind of turbines for energy generating assets. And so, if you look at it from today's point of view, maybe over the last couple of years, the stock price has like skyrocketed. But I think that's like a very privileged perspective to have had, because I understood what was happening on the ground level with nuclear as a venture-backed industry. And so I think that's like my favorite part, is just kind of the amazing work founders are doing, and kind of the insight it has onto kind of society at writ large. I think the hardest part is almost the same thing. We come across hundreds, if not thousands, of amazing founders every year. And the unfortunate reality is like we have a very limited pool of capital that we can invest from. And so what that means is oftentimes we can't invest in people we think are great, ideas we think are great, markets we potentially think are great. And it's that kind of like fine line that we have to walk as kind of trusted fiduciaries for our limited partners. That is certainly something that weighs on me. Like if I had my own pocket of money, like I for sure would invest in a lot of founders that, maybe would be hard to invest in as kind of a venture fund.
Yep, it is. Andrew, another one of our colleagues, said that the same thing. One of the hardest things is that we are spread so thin. We go a mile wide and an inch deep at times, and that can be hard because we can't invest in everybody. We wish we could. Next question that founders wanted to know was whether there was something that you wish founders maybe had a better grasp on as it relates to being a VC, whether it's our own process, what we deal through our day to day, or anything like that, but kind of a peek behind the curtain, so to speak.
Yeah, I think like, not that it's interpreted this way by founders, but I feel like, sometimes in the cases where VCs have to put on kind of the villain costume and say no to an investment opportunity, like it creates this challenge because like truly we might have thought you were a generational founder, or a fantastic founder in the ecosystem. Like your idea certainly is novel, and we think like the technology you're building is important. And sometimes like the no's, I feel like it may be an interpretation of us dismissing, a belief in their technology or their sector. And sometimes it's not in reality. Like it's just limitations on, how we think about fund deployment, maybe how we're thinking about sectors that we're trying to focus on. It's just there's a bunch of factors that go into our decision making that sometimes it makes it hard to invest in everything that we want to. So I think like one of the things that maybe is misunderstood sometimes is like we're not trying to be bad people, or we're not trying to be dismissive of you. We're just trying to think through everything that we have to as an investment, as a firm, and hopefully we come to the best decisions at the end of the day for our LPs. But we get it wrong sometimes too.
Yeah, absolutely. We're not trying to be the bad guys, even though a lot of times we're depicted that way. Next question was, what are some of the areas that you personally maybe are most excited about right now? You talked about some of the things that we're excited about with Harpoon, but is there anything particularly exciting for you right now?
Yeah, and it's I think for me it's a similar thread to uh, what I was kind of putting down with GE Vernova. Like I think like over the last call it handful of years, there has been a big focus on like how do we get more domestic critical mineral discovery? How do we get more U.S. energy generation capacity? But I think like the solutions that are building towards that one are very much necessary. Like we just need better technologies to solve fundamentally hard problems. But I think the challenge comes that we'll see, like given a lot of these are very long dated ideas and deployments, like we haven't yet seen kind of the implications for surrounding technologies and infrastructure we need to support that as well. And so, I think it'd be very cool to see more advances in like energy transmission, thinking about end of life cycle products for things like nuclear, whether it's kind of waste recycling or waste disposal, things like uh, how can we rethink EPC companies for like this AI native era that we're also seeing in parallel to kind of the boom in deep tech and defense tech. How are we thinking about what has traditionally been done that have been historical limiters to deployment for a lot of these things? And finding solutions to kind of accelerate that for today's era.
I like that. And I think it's just the space obviously is going to continue to grow and be exciting for the next handful of years. Our last question before we dive into the fundraising process itself. This one's kind of a moment for you to shine some light on Harpoon. Why would founders want Harpoon on their cap table? What's kind of the pitch for Harpoon to founders that are fundraising right now?
I truly believe this with all my heart, and I guess you could say I'm biased, but
Yeah.
I don't know a team that will work as hard as we do to really unlock what we think our primary values. I think we have built a tremendous track record in being able to get government contracts, or at least put you in a position to maximize your odds of getting some type of grant, award, some type of congressional appropriation. That is a lot of expertise of the team that is beyond me, so I can't take personal credit for it. But I think like these are folks that have built their entire careers around relationships and working with the government. They have a vested interest in supporting the government. And I think like that is a very transparent, even in kind of like the overall dollar figure. I think today it's a little bit under 1.2 billion that we've helped founders in our portfolio get from a government revenue perspective. And I think like you know, maybe it's not as discussed as much, but I think like the things, you do, Matt, for through Black Flag, through kind of just ongoing marketing is also extremely valuable. Like one of the things that I've learned more and more through this experience in venture is how powerful like storytelling as a function within the venture backed company lifecycle is. Like there is so much that the technology alone can speak for. If you don't have the right way to message it to different counterparties, whether it's the government, investors, you know, partners, customers, like that is a critical piece to the success of a startup. And I think like there are so many initiatives that you're working on that is really helping to accelerate that for companies in our domains.
That's a good answer. I love it. And I'm biased as well, but I agree that I don't think any fund out there works as hard as we do for the founders that we invest in. So I completely agree there. Okay. Now for what people are here for, the actual fundraising process. we're going to break it up into three different parts. The first is, how do founders go from, I have an idea, I want to fundraise, to that first meeting? So getting the first meeting is the first phase. Phase two, they have that meeting. How do they crush it? How do they knock it out of the park? How do they make a good impression so that the conversations can keep going? Step three, you've had a lot of first conversations. Now it's just kind of herding cats and then pushing you around over the finish line. We'll talk about the diligence process and what it means to maybe have people on your cap table or not, and making some of those hard decisions later on. We'll then have a couple questions on some of the things that you see founders do after they fundraise, and then we'll go from there. So starting with getting in the room, typically what we see founders do is they create a Rolodex, a CRM, a list of funds that they want to reach out to. So the question for you is, what would you recommend founders index on, characteristics of these funds or people that they should be looking for when making that initial list of funds they should reach out to?
Yeah, I think it's very important actually to think about like who actually is a strategic partner for how you want to run this company. Like I think having a broad level sense of like the attributes you're looking for a partner, and they might not be different in every single partner you want to bring onto a round. And so maybe there's a function for a fund that specializes in marketing because to you, like again, like maybe you don't have that native background, you want help in that area. Maybe it's something like Harpoon where we can really accelerate you on the government side. And so just to get through like what are the actually the priority areas where like as a founder, maybe not weak areas in your kind of toolkit, but areas that you feel like you can have support in. I think that's an important thing. I think like some of that conversation can be done through research online. I'm sure there's a lot of AI tools these days that are kind of working towards helping with that. I think both on our side, but on your side, on founder side as well, like tapping into your friends that you trust, that you have seen go through the venture fundraising life process, and getting their take on who they have as trust partners is extremely valuable. And honestly, like from the venture side, that's also great for us because like when we invest in a founder, we've already gone through the process of vetting them as an investment and as an investable person. And so when we get references from founders, like we take that very seriously. And so
Yeah, the references from founders is huge, and this is kind of another piece that our colleague Andrew said, that your fundraising process really starts like months before, and it's trying to build those relationships. Any advice or tips for folks that are needing to build some of these relationships first before they can actually rely on some of them for warm intros? Any advice for some of them on how what they could be doing? Is it going to events? Is it somehow joining some of these networks, or what advice would you give them on how they could start building that network now?
yeah, I think events are helpful. I think candidly, or maybe from my perspective, like events are great as kind of a baseline level of introduction to somebody, but it's hard to make like meaningful relationships just off of an event, in my view.
I agree, especially if it's just one off. You meet somebody and then that's it. Yeah,
Yeah, I think, again, to the extent that you can ask for, I know it's always tossed around, but warm intros to firms or to groups, that's always a great way to get tapped into the ecosystem. Hopefully you can build a good relationship even months before you formally raise a process. And if you do with like if there's certain investors that you start to get really good repertoire with, VCs, like that is the name of the game, is just kind of networking and sharing. And so I'm sure a lot of these firms are open to kind of introducing you to some of their partners that they've worked in the past from a venture perspective. And so I think like just finding points of connection, whether it's through founder friends, whether you know somebody at a venture firm, as kind of like your beachhead, and then leveraging those relationships to expand to people that they know and that they've heard of from a reputational perspective is kind of always the best way to go. I also like personally really appreciate cold emails and and,
I was just
and
going to
cold
ask that.
LinkedIn's. I know not everyone is a fan of them, but honestly, when I was starting off in venture, like that was my biggest toolkit. I didn't have a network, and so sometimes like yeah, a lot of it like wasn't even cold calling or cold emailing to founders. It was other VCs because I wanted to just start building a reputation with firms that I had known of or had heard of. So that at some point maybe we could be partners on a deal or they could share something with regards to a deal. Like it's always kind of beneficial in the long.
Yeah. So let's say that they're reaching out to you cold. What are some of the things that they can do in that email or in that message that you're looking for to stand out? Because as VCs, we get hundreds of emails per month that are like, "Look at my startup." what are some things for you personally that can help grab your attention and even before you open the deck?
Yeah, I think like a couple things here. Like, one, as VCs, especially on kind of lean team like Harpoon, like we're always context switching and doing different things and different tasks. And so like extent you can keep it relatively succinct, you know, that is always generally a helpful framework. You don't want something that is like I don't know, 10 paragraphs long. Like I in reality, I don't know if I'll read it. I think the second thing is like it's very clear when, as a receiver, like something was kind of mass emailed, mass distributed. Like there's kind of some telltale times, like maybe you've got like couple emojis with these bullet points, and it's like very framed as like a generic email that you sent to a bunch of people. I think to that extent, the more you could personalize it. Actually, Andrew on our team shared this tip and trick with me, just generally about dealing with people in the ecosystem. But like, say you had like met somebody at an event, ask them for a photo because you never know. Maybe you need to reach out to that person later, and
That
you
is
could
so
attach it to the
smart.
email and be like, "Hey, like, I don't know if you remember me, but we met a couple months ago. We talked about what I was doing, and you said to reach out down the line. You know, find points of connection, even if you had never met like a certain person that you're cold emailing. Maybe do a look on their LinkedIn." Or just a search on like company webs or their venture firm's website, see what they're interested in, maybe see what's something in their past from a work perspective or whatever, and see if there's like a mutual connection that you have through those different things. And so I think like anything you can do to like slightly tailor it to the person that you're reaching out to is will go a long.
Yeah. Yep. Agreed. So there's probably no better person to talk to, or even maybe fun to talk to in many ways, maybe YC or some of these larger accelerators. But we see a lot of pitch decks, a lot of pitch decks, through Harpoon. And, Harpoon, you mentioned, we might get some introductions or warm intros there. But on the Black Flag side, we get a lot of cold pitches, essentially. People are submitting their pitch decks directly to us. So maybe you, better than most people in venture, have the perspective of what it means to have a compelling pitch deck. So I guess let's start with that. What in your mind is or makes a compelling pitch deck just right off the bat?
Yeah, I think fundamentally, and this is like shifted a lot in my perspective, like over the last couple of years. But for me, there's namely two things I look for. It's kind of founders and market. And so from a pitch deck perspective, it's like from the founder side, it's not even necessarily like here's our two pictures and all the logos of the companies we worked at. I think it's helpful as like a quick reference of like, oh, maybe this person has expertise. But I always like to see like a little bit of meat in a pitch deck about like what a person was doing. Maybe it lends to their expertise. Maybe you're, academic researcher, did a PhD in this area. Maybe you worked at a company that is kind of pushing the frontier of a similar domain. I think that's helpful too. Or perhaps it's that you had kind of like an insight as a founder that you don't feel like traditional industry has kind of seen. So I think like that's helpful from a founder perspective. And I think on the market side, like I think what I don't mean by this is just having like a slide with TAM numbers. Like I think the assumption is always hopefully that the market you're going for is large or that your solution can make it large. But kind of going back to like this insight point on the founder side, like as with everything in fundraising, it's a storytelling. Like I want to understand like what is like the fundamental problem or bottleneck that you saw. Why is it that like no one is addressing this in an effective way? And I want to see like what is it with this technology that you're building that is such a fundamental unlock or game changer to address that issue. And so it's a little bit of like the narrative arc of like, can I believe that those three pieces are true at one point in time? Yeah.
I like that. You mentioned, team being, one of the more common slides of people saying that's the most important one or one of the most important ones. In your mind, what can founders do to make their team slide stand out? And even then, what are some mistakes that you see often with team slides too?
Yeah, with team slides, in my view, the biggest mistake is having, and I see this all the time too, even sometimes with portfolio companies, but like having just your image, your name, and your title, and then like two or three logos of places that you worked at. In my view, like again, it is like okay, directionally, it does tell us like some sense of your work experience or your background, but I feel like you're leaving so much on the table. Like, there's only so much I can gather from a logo, and maybe sometimes it's a case where like you'll see all those logos, you're like, oh wow, those are amazing companies, candidly. But
Right.
then you go on somebody's LinkedIn, and it's like, I was an intern there for 3 months, and that's across the board, and you're like, well, that's a little bit misleading, to be honest, in my opinion. So even if it's not like, even if you're coming at this, you know, first time founder, maybe you don't even have work experience, like including like a little blurb about like what your connection to this problem is, like what the authenticity is and why you're addressing this issue. And again, maybe that is your background. Maybe it's like you live this problem. And so maybe you can write like a, couple sentences like I worked at SpaceX on, this specific issue within the rocket supply chain, and it was a huge bottleneck, yada yada yada. But I think having like a little bit of that context kind of feeds into understands what the problem is that they're addressing and like why they're doing it.
Yeah, I mean, you brought up a point earlier that I've heard from a lot of VCs on this is that when you omit information, VCs will almost always now assume not the worst. You gave the example of seeing like a Tesla logo or SpaceX logo. If you don't tell us what you did there, we see that so often that people put stuff like that, and then sure enough, they were just an intern there for like a week or a day or a summer, or maybe they just did some little small stint there for 6 months, and they didn't actually do anything there. Because that happens so much, when we don't see context, if you do omit it, we will just kind of assume that it's for a specific reason. And you shouldn't do that. Like, unless you really want to make sure you're putting your best foot forward there whenever you can. Because we see so many of these, we will sometimes assume the narrative for you, which isn't in your best interest at all. Any other slides? You mentioned, mission and team. Any other slides in there or something that maybe a pitch deck needs to have in your opinion and that you see is constantly left out or anything like that?
Not necessarily that left out. Again, like I think it's important to kind of show it's not like a single slide per se, but kind of again that narrative arc of like um, high level problem, issues with market, solution in a way that very cleanly tells a story. We see sometimes that like, I don't take it in a positive or negative way per se, but sometimes I feel like it's not necessarily needed, especially the more hardware intensive you go is kind of like at the early stages. It's kind of like your expectations for revenue. And again, like TAM, I think like these things are great in theory, but like they're so subject to change. And I think like sometimes it actually is like almost goes against your favor, because I can look back into the deck and say, if we invest in you, and not that I'm holding you accountable to those numbers, but like it's at least like a frame of reference for like what in theory you could be benchmarking to. And I feel like that actually might hurt to some extent in the long term. But again, it's not like I'm actively like looking for those things. It's just like I thought you had said that you were gonna hit 5 million in revenue by X year, but you're only at one. So I think it's like maybe to your benefit as a very early stage founder to just focus on, the things that you're in control of right now, and maybe not include things that are as speculative.
Yeah, maybe, I mean, if you go and show us a little bit, like we know that you've thought about it. Sometimes that's all we need. But if you spend almost too much time in it, to your point, we might actually not hold you accountable, but we almost look at that as more of a, oh, wow, okay. You're going to get $5,283,000 in revenue down to the decimal. So I agree that there's a fine line there for sure. Any mistakes that you see founders make just in the pre-meeting phase in general before we jump into the actual meeting itself?
That's a good question. From the pre-meeting phase, not really. Like there's never been like something that triggered me that was like, okay, you did this before a meeting, like absolutely not going to meet him anymore. Like
Yeah.
this is a major red flag. I guess it's not necessarily in the action of like what you might send an email or correspondence. But I think like sometimes like, well, one, I think it's always helpful to shoot around a deck before you have that meeting, just to give like the VC a little bit of context on what you're doing. Maybe it's like a teaser deck, so it's not like taking away the script that you're going to speak to. But again, like I think like one thing that could be a red flag in my mind is if like you sent that deck and there's just like a huge misrepresentation of like something you put in there that like from a factual perspective is just like factually wrong. And so to some extent, like the things we were talking about, like, logos on the team slide, like if that is like completely, you know, maybe an
Misleading.
exaggeration, yeah,
Yeah.
misleading is probably the best word. Like that is like a red flag to consider. But again, I don't think that's like necessarily a go no go consideration on taking the meeting.
Yeah. All right. Well, let's say that they've impressed you enough. They have a meeting on the books. They're meeting you for the first time. What are you looking for in that initial meeting, 30 minutes or so? You're meeting the founder for the first time. What are you looking for in that meeting to give these founders some perspective?
Honestly, it's a little bit of this is a little bit weird to talk about because I think it is like it goes into like some of the softer, harder to kind of pinpoint exactly. But I think it blends both into like authenticity and attitude. Like I think sometimes it's hard to find yourself like personally motivated to want to present a company to your investment committee or your team if you don't feel like there's a reciprocating enthusiasm from the founder in what they presented. Sometimes this happens where like, I think the technology is very cool, but I just like it's I don't get the sense that like the founder was really trying hard to sell me onto this vision of what this company can be. And that really is like a lot of, what we try to do, or what we try to invest in. And I think like to that point too, and maybe this bleeds into your attitude towards it, but like really like the heart of wanting to build this. Like it's very clear when somebody is like so passionate about what they want to build, about like their purpose to build, and it really does bleed through, like, the conversations you have. It's hard to, like, describe exactly, but, like, you know it when you see it. And so I think, like, it's important that, like, whatever you're doing, you truly feel like it's something worthwhile your time and your effort and, like, the sacrifice that you make as a founder in building your company, which I'm sure is kinda true across the board, but I think having a true passion for it is important.
Yeah, you just brought up a really good point that we should kind of double click on here. The first meetings are sometimes going to be with maybe one person on the team, one person on the investment team. And if you aren't motivating us or selling us to then take that to the rest of our team, because what ends up happening, it's like carrying a bucket of water. You're going to fill up our bucket of water. We got to go carry it to somebody else and show them it's inevitably going to spill. If you don't fill up our bucket, full enough, it's not going to be enough to convince the rest of the team to do this. So much of that first meeting is giving maybe the one person that you're talking to on the team enough ammunition to then take it. And we talk about internally a lot, pounding our hands on the table to move a deal forward because sometimes that's what it takes because there's so many deals that we're maybe talking about. So you're exactly right on kind of trying to motivate us or give us energy to then carry that forward as well. What are some of the green flags? So you mentioned, having that energy in there. Are there other green flags or traits that founders carry in those meetings that get you excited?
Yeah, I think, like, this is almost, like, paradoxical, but I think, like, at some point, again, and this just kinda goes towards, like, demonstrating, maybe your passion or knowledge, or so maybe it's like a representation of that, but being able to distill, like, what inevitably will be a very complex subject, whether it's software, hardware, a way that, we can understand. Harpoon is a relatively generalist firm from an industry perspective. It's also very clear when you know so much about the work you're doing and about the product that you're building that it's so easy to describe and kind of like uh, relate from explanation perspective. And so like what you might be working on, you could probably explain it to a scientist kind of very precise terms, but also being able to like translate that to like investor talk sometimes.
Yeah,
Like it's a valuable skill, but it's also like, it also, I think is a good representation of like, where are the founders at?
yeah. So maybe a different way of thinking about this too is, are the opposites of that red flags? Or are there additional things that maybe founders can do in that meeting that are a huge turnoff? You're thinking, we can't invest into this person. What are some of the things that founders can avoid on these initial conversations besides maybe just the lack of energy or the lack of knowledge? Or are those the only two things?
Think, and this goes back to like the whole point of storytelling and like the conversation you're having with the investor.
Hmm.
Maybe this is just my preference too, but I think
That's great.
sometimes, what when you're going through your first fundraising cycle, like maybe there's, this idea that, you kind of have to have a script. You have made your pitch deck. You need to like run through it and give kind of the same conversation. I think like being able to have like an open engagement dialogue, like a very dynamic conversation is interesting. Like sometimes like I get lost a little bit when it's just like somebody reading a deck for 30 minutes straight. And maybe speaks to my own attention. But, I think being open and like having a very kind of, I don't know, natural discourse about, the problems you're seeing in the world, about, your view on what needs to be fixed, like that is like the interesting meat. And we can read through the slides if we need to after the call. And so maybe that's one thing to kind of avoid in my.
A couple fast questions here that founders were just curious about going into these. What is your opinion on multiple founders being on the call versus maybe just the CEO?
I think it's very dependent. Like even I can see within our own portfolio, like sometimes the CTO or, the COO has a lot to add from like a storytelling perspective too. Like I think a great point in case is kind of Matt and Yasser at Allo. Like I think they're both exceptional at being able to sell the story of why Allo is a valuable company. And I think Matt, one, he's kind of a fantastic salesman in general, but I think Yasser is so fluent in like the technology side of things that like it helps having that and like giving you kind of the assurance that like there's a little bit of like a tech de-risking that you could talk through. And so like there are cases where it makes maybe sense to have both co-founders on. That being said, I don't think it's always the case. Sometimes, you may feel like you just need to have somebody else on to showcase the team. If you feel like you have control of like being able to shed light on the company in the best possible way, I don't think you necessarily need like your co-founders there.
Yep, agreed. Other question was, what does the pitch deck look like? Is it just walking through a pitch deck the whole time? What is your preference on whether you want to be read to, or do you prefer not to have a pitch deck, or what does that balance look like to you on that first meeting?
Like I think pitch decks can be helpful if you think that there's certain parts of it that illustrate what you're saying in a way like that is hard to verbalize. Like that is helpful. Like maybe there's a chart or diagram or whatever in there.
Mhm.
And to the same extent, like demos oftentimes are very, very cool to see because then we can see like in a quasi real world setting, you know, how does the system function or how does your technology work? So demos, videos, but I certainly wouldn't like lean on the deck as like the focal point of the meeting.
Agreed. What are some of the questions that founders should maybe ask VCs during that first meeting? Or do you have any opinion on whether they should be asking questions at all? Not because we want to see them ask it as like a positive, characteristic or check mark, but more because it is important for founders to take ownership of this process. What are some of those questions that when founders ask you, you think are helpful for the fundraising process itself?
Yeah, I mean I totally think founders should be asking questions. Like the relationship you build with the VC, like this is a relationship you're gonna be having for, maybe 7, 10, 12 years. And so especially at the early stage, like and especially when you're starting off, you know, maybe there's a group of like 2, 3 investors that you're really going to on a, you know, whatever, day to day, week to week, month by month basis to have kind of their perspective on what you should be doing with your company. And so I think it's very important that you understand like who you're getting into that relationship with, like what that firm or what are the values of that firm? What are the things that they may be able to help in the near or long term? And fundamentally, like, are these people that I feel like I can have that relationship over the years? Like, you don't want to get stuck with investors that may not have your best interests at heart, and maybe to some extent like malicious at some point of your journey if things don't go their way. And so I think it's important that you kind of suss these things out naturally through the conversations that you have.
Yep, agreed. Any other feedback or advice you give founders from this phase of the process, those initial meetings phases?
Nothing else right now. Like I will say, obviously like there is always a little bit of a mental game being played in the fundraising process. And so to some extent, like I don't want to say play games for the sake of playing games, but like I think just be cognizant that there are things that investors may see as signals of a successful raise, of a not successful raise that sometimes are in your control and sometimes not. And so like I feel like one of the things we talk about sometimes is like sometimes feeling too needed during the process, or like
Mm,
you're always the one that is being proactive about reaching out versus like the VC. Like that might be in some extent like interpreted as like you needing the money more than necessarily we want to be giving you the money, and so it creates like this a little bit of a weird dynamic. And so again, like I think like just being like cognizant of the fact that like some of these things are running through an investor's mind at some point in the process is kind of like something to keep in thought.
yeah, and I mean, that plays a big role into kind of this final phase of you're developing FOMO and you're really trying to get investors kind of interested. But you're right, there's a fine line between wanting to keep them interested, but then also come off as being maybe overly needy, and that's not something that you wanna build there. Our colleague Andrew again kind of mentioned this phase being like, how do you become the most attractive girl or guy at the dance? Like, how do you just end up stealing attention away? Which can be hard to do, and it's definitely a balance. But going into maybe we take a step back. The phase that happens typically right after that first call. Let's say they have a good call with you. What does that process look like at Harpoon? Let's say for getting it through the entire process. What do the meetings look like? What does the diligence process look like from there?
Yeah, I a process perspective after the first call, I think we're very fortunate to have such a cohesive team, and so we run pretty nimble and we can run fast depending on the situation that the founder is facing. Uh, Typically, what it'll look like, maybe holistically, 4 or 5 meetings with the team. We'll bring on more team members as you go through the process. We'll loop in our government team at some point too, so they can start forming ideas about where they see opportunity on the government side and how they can be additive as a partner to you. But from like a diligence perspective on our end, yeah, I think it's a mix of things. Like, of course, there's traditional research. I think oftentimes in like domains that are maybe a little bit beyond kind of the background of our team, like we'll reach out to subject matter experts that we know of in our ecosystem, get their views, speak to other venture capital firms that we trust and that we've partnered with, and get their perspective. And so to that extent too, like this is kind of touching on what uh not to do and kind of like the misrepresentations that happen during a fundraise. But like for sure, I would caution against making claims about how engaged certain VCs are, or the fact that you almost have certainty that a certain VC is going to be in the round, because like it is a small community at the end of the day. Like at some point, somebody in the team knows perhaps somebody at that firm, and so it's always
Yeah.
like one text or one phone call away where we can verify whether that's true. And if it's not true, that that's obviously not a
And
good
it
sign.
happens a lot. It happens a lot. It's not, very, super common, but common enough to where we see it quite often. And I think the problem with it is that sometimes founders get overly excited about the feedback they've gotten from other investors. So we see this too, where maybe an investor's like, we're really excited. Maybe Friday we could think about, term sheets and contract stuff. A founder hears that. They take it to another VC to be like, we're getting a term sheet on Friday from X, Y, and Z fund. And then we'll be like, oh, okay, great. We reach out to them and the fund's like, no, we never said that. So there's this weird game of telephone that happens kind of during that phase where this is more just feedback for founders to be very specific and sometimes understand that even on the VC side, we may come off as feeling overly excited or more excited than maybe we plan on being or can be. And so you just have to be careful. So it's not always on the founder's side of being like sometimes they do feel like a VC might have said something, but they was slightly misinterpreted there.
Yeah, exactly.
So sometimes we see during this phase, founders get to a point where they have to make a hard decision. It sounds like a nice problem to have, but they might be, I call it slightly oversubscribed, where they
Sure.
have like one or two checks that they kind of have to either go back to an investor and push them down. Sometimes you have to take an investor off completely to make room for a new investor. And then other times you're kind of making maybe a decision between a handful of investors to move onto your cap table. The question is around what advice would you give those founders in making the best choice that they can? It's such a hard thing because you might have only known these people for like 3 weeks and you're kind of making these lifelong bets with them. But what are some of the things that you should or that founders should index on when making that selection of who to keep on their cap table and maybe who to keep off?
Yeah, and my response will kind of go on a slight tangent, but like, at the end of the day, like I don't know if I have the best advice on who they should be choosing. Like I think ultimately it's a little bit of like their discretion on, what they feel like that venture firm brings to the table. I think like probably where I have better advice on is like how they should go about it. Like we have certainly been in situations at Harpoon where maybe there is like this perception that we form that we're going to be involved in the round to some extent or another, whether it's kind of like the check size we wanted or not. And then we get kind of like somebody may leverage our offer to then go to another VC and kind
Yeah,
of,
all the time.
flip what we would have invested and get somebody else's attention. I think the biggest advice I can give is like be transparent with all the partners that you're seriously considering. And so if you have a firm that's leading locked in and there's 3 other firms that want to follow on, but maybe like you had only really allocated space for what would have been 2 of them. I think shooting each an individual email saying, look, this is a situation I'm in. I'd ideally love to have X, Y, and Z all on my cap table. Is there any chance you would be able to willing to reduce your check? Take slightly a little bit less ownership so that I can have all of you guys. I think all of you would be fantastic partners in your own way, and I'd love to have you all on my captive weight. I think like that level of transparency kind of gives us the feeling that like you actually are thinking of like the best interest, not only for yourself but of like the partners involved. Like it builds like a level of trust in like the things you're telling us. I think that is like super valuable.
Yep, I agree. And it's all about trust. Over communicating as best as you can to try to keep things moving through. Are there any other common mistakes that you see founders making during this process, whether it's building up at the cap table, doing kind of the final round of interviews or chats with VCs? Anything founders should be weary of during this phase?
I think especially in situations where like there is maybe hotness to the round, for
Yeah.
lack of better words, you may be tempted as a founder to always take like what is most favorable to you. But I think like uh, it's helpful. I mean, it's hard because obviously like this is your life's work and this is like what you're giving everything to. But in a very like simplified, short way of saying it, like sometimes it's helpful to take a step back and not think so myopically about like the small nuances of like I'm giving up 18% ownership versus 19 with this term sheet. Like I really do think you have to think about it from like what is the long-term value of this partnership and how do I optimize for that here? And I think like yeah, again, it is like I'm not gonna lie, it's a challenging thing because like of course like it may be in your interest to have more ownership, not just in this round, but for future rounds for dilution for your employees. But I think really giving, a strong consideration of everything at the table, not just, the percentage amount or the dollar amount is sometimes things you have to think about. There's like that great clip from Silicon Valley where or Richard, the CEO of Pied Piper, is talking to his friend whose startup went bad, and he's like, if I just hadn't taken that term sheet that like overvalued my company, like I would I feel like I would have been so much successful. And Rich was like, "Why don't you just ask for less?" And he's like, "I could have asked for less. I
You
could have
could
asked
do
for a
that?
lower valuation." Yeah, is like
Yeah.
you do that. It's true on the valuation side to like mitigate against overvaluation, but I think it's just true in general that like know what you're optimizing for, and sometimes like specific nuances in ownership or dollar isn't necessarily that the strongest indicator of what you should be optimizing for,
Yeah.
but maybe it is.
Well, especially in this very first, we're assuming in this case, it's like the very first round as well. So when you're this early, especially trying to either vastly, inflate evaluation or even trying to keep it really low for dilution purposes or whatnot. In the grand scheme of things, if you believe your business is going to be massively successful, it doesn't matter as much as you might think in those very, very early days. So completely agree. All right, let's say that they've close their round. There's 5 minutes of celebrating, and then kind of reality sets in, and they got to get back to work. There's a couple questions kind of in this phase I'm curious about from you. The first is, could you set maybe an expectation bar for how founders should think about their relationships with investors going forward after that? Any advice or feedback there?
Yeah, I've always been a proponent of having good communication with your investors. Like the reality is like, you know, we know for sure as a founder, you're giving everything to your company. And maybe like it doesn't seem like the priority is always to give your investors updates. And so, I know there's a little bit of a balancing act to do there, like importance of building your own company versus just posting investors on probation. But I think like having like a somewhat healthy cadence of updates, not only like um not only it feels good from like an investor's perspective, it also just I think gives good signal as to the trajectory of the company. This is probably more important as you think about like follow-on raises too, and like getting pro rata from your inside base. These investor updates to some extent are like a continuation of fundraising in the sense that like, of course, you don't want to be omitting information that is like materially good or bad for the company. But I think like you can frame certain updates in a way that really shows like the progress you're making at a company. Of course, we know there's gonna be hiccups and lowlights, but like it also is an opportunity for you to like really show like how much the team is putting into build this company. And I think like that makes the conversation a lot easier internally for VCs when they're like, oh, they're raising more money. Look at everything they've done. Look at everything they've done in the past 12 months. And so it's just building a case. But I also think like it's a good from like just a general relationship keeping perspective. VCs want to help. Like if there's things you need help with, maybe that's a good reason to reach out and like put like what your asks are from investors, and maybe they can help to some extent in a way that you didn't maybe imagine. But it also goes towards like this idea of like building trust with your investor. Like they want to be, well, maybe some more than others, but they want to feel part of like your journey, and we want to hopefully be helpful in your journey. And we can't do that if like you don't necessarily give the time to be able to share with
Help.
us.
Yeah, no, absolutely. What are some of the biggest mistakes that you see founders make, perhaps immediately after closing the round? Let's call it the first 6 months, maybe after they close their round.
I think like one is fundamentally like run your own race. I think like we're in this interesting position today where we maybe have seen technology and investment and new startup formation in physical realms, or at least technologies supporting like the physical world expand at such an accelerated pace compared to maybe the 2000s. And I think that has come with it like a certain level of competition in domains that like we hadn't traditionally seen. Like if you go back, I mean, even today, like you look at a company that we invest in, like Astronis, like there's not really that many companies like building modular satellites for high orbits. But you do see like hundreds of companies building for drones today. And I don't think that necessarily was a common thing back then. And sometimes, sometimes I see founders like both on the fundraising side and just in the general company building side, like get into this race with each other where like you're seeing your closest competitor, achieve XYZ. Maybe they just announced a $15 million fundraise. Maybe they just expanded their headcount by 50. And it almost gives like, fairly enough, you're a competitive person as a founder. Like it gives you this like drive to match that, but it may not necessarily like make sense for your business case. And so I think it's always important to just like always have that in mind that like this is fundamentally your company. You're not like there's a quote I had heard the other day that was something along the lines of like be yourself because like everyone else is taken.
Exactly.
And it's like the same in the venture world. It's like run your own race. Don't let the noise of the outside world get to you. So I think like that's probably a couple things in there embedded that are quite important.
Yep. Matias, this was awesome. We covered a lot of information in less than an hour. Any last piece of advice you give to founders that are going out right now to fundraise before we before
Yeah, I think the last thing I'd probably say, fundraising is hard. It just is. Like it's not fun, as you said earlier,
Yep,
Matt. Um, and that shows through. And I think too, like from this is maybe more of like a tactical response, but especially as like this new wave of kind of again, like maybe this is more leaning towards physical technologies as well, but really think of like fun, like if you think about fundraising as like this sequential thing that essentially never ends as a company. Like even once you're a public company, you have to raise your IPO, which is in and of itself another fundraising round. Then you have to raise, follow on financings through the public markets. you know, these things will always stay. So don't just think of like the fundraise as an isolated case, and really do think about like the money and the capital you're trying to raise in terms of like what it means to get to this next goal. I think like a lot of like young founders have great ideas and a good sense of like the product they want to build. Building anything, but building hardware too is very hard. And so like give yourself some margin of error. Know in a very thoughtful way, like think about what you can actually achieve in like a stated time frame and just ensure that like you have the appropriate amount of capital to actually get there. Like one thing I've seen a lot in like the physical world right now from a company perspective is like I think people have underestimated like how much capital necessarily will be needed to get to point A to point B. And so we see a lot of like these, bridge rounds for lack of a better word. And not that there's anything inherently wrong with them, but I think like sometimes it is the perception that like you need it um because the company it just needs it to survive. And so I think just like really thinking through it at that point in time, like what it means for that fundraise and like how long that gets you is always important as you plan your
Yep.
fundraise.
That's a great way to end it. Thank you again for being on today. I think that there's a lot of founders that are going to find this very helpful. Any last places where folks can follow along with you, with Black Flag and Harpoon? Obviously, we'll include some links in the show notes as well.
Yeah, I mean, for sure, follow Black Flag Harpoon on LinkedIn, on X. Um, I'm Matias Zorrilla, so that's my LinkedIn. And I think across the Harpoon team, we always try to be active on our socials. So always great content coming out of there.
Thank you again for being on, and we'll chat again soon.
Thanks for the time, Matt.
Bye.
Pitch pass, iterated fast. Story beats data when the storyline's fast. Vision's the ignition, but the numbers steer the ride. Conviction and precision, watch investors collide.